Okay, what's the difference between a 401k and an IUL? So let's break this down. So firstly, how is it taxed? 401k contributions are taxed pre-tax dollars, and you pay no capital gains tax when your money grows, but you do pay taxes when you pull it out, which is your income tax rate. So the pros of 401ks, you get an employer match if your company offers it, and you also get a tax write-off on the contributions. What are the downsides? 10% early withdrawal penalty, tax on the future. We don't know what the taxes are going to be in the future, but those are the tax rates you will pay on the 401k, not what they are right now. Fees, many 401ks have tons of fees. And not only is there a 10% penalty if you touch it early, there's a 50% penalty if you don't touch it when you get older at 73 years old. Under the IUL, it's taxed in the very beginning, so it's after tax dollars, you get no tax write-off, but the money grows without paying any taxes, and you pull it out and you don't pay any taxes. So what are the benefits? You have life insurance coverage plus living benefits. You have no tax on the growth or withdrawal. Ability to borrow cash value uninterrupting the growth inside your cash value. 5 to 7% interest rate. Also comes with no risk of loss, and there's no limit on contributions. The downside is there's no write-off, so you don't get the write-off like you would in a 401k. So let's say we're doing $1,000 a month into a 401k, assuming a 7% return, which is 8% minus fees over that lifespan of the investment, 3% match over 35 years, that's $2.3 million. Using the 4% rule for 30 years at 25% taxes, that's $96,000 income you're earning. And if you're not getting a match, by the way, many people are not, it comes down to $74,000 per year. With the IUL, 6.4% return, no matches, but 35, it's a less money, $1.4 million, but that turns into $100,000 tax-free for life. And keep in mind, all this money is available for a policy loan. So if you're doing a max funded policy, assuming this is a 30-year-old, that's going into the cash value. The death benefit is immediately a $322,000 policy. After 10 years, there's $149,000. After 20 years, $437,000. And at the age of 65, $1.4 million. And all this money is accessible for policy loans, withdrawals along the way, whereas a 401k, if you pull out a loan, you're pulling out your own money, so it stops earning interest. With an IUL, that does not happen. So if you're interested in looking at an IUL for yourself, send me a DM or comment more info in the comments below.